Hello and welcome to this weekend's edition of the Silver Log, and this will be looking at almost every single time frame, at least down towards the hourly chart, using multiple different time frames, getting different perspectives amongst the same market, and that market, of course, is the silver market priced in US fiat currencies. Now, I've been asked very little, actually, less than I would have been anticipating. And why am I doing these when I A, don't trade the paper market, and B, really do not even support the paper market? And there's many different answers for it. One of the answers is because I feel as if this is education, understanding patterns, understanding analysis from what you see, and making the best educated decisions that you can. Secondly, if you're buying the real physical metal, then what's the difference? Whether you're doing it by paper or whether you're doing it by the actual buying of the bullion, there's different strategies, but all in which you're still using the same charts. And myself, I'd like to use this longer term perspective and almost say, okay, this is how I want to day trade this, imagining as if this is like a short term chart and using the quarterly, if not the yearly chart, looking for signs on here where it might be good for selling. But at the same point, I'm also kind of cheating. And the reason why I am cheating is because I know little something that a lot of people may not know, and that is these markets go up with inflation. And inflation is still amongst us. So over the long term time frame, these markets, and really almost anything, whether it be gold or cotton or stocks or whatever, they all go higher. It's very hard to play the tangible asset of stocks without playing the paper game. But as far as things like gold and silver and cotton, you can definitely play that on a tangible level. At the same point, I realize that we're now at this level that we were before 1980. So I'm cheating in knowing that it was 50 before and understanding that the odds of breaking above that are extremely high. So really, I'm not cheating. I'm just going with what is the most obvious situation. The silver market is going higher, the currency is collapsing, and the most likely scenario is that silver will maintain its value where currency will not. So that will be it for the introduction. We'll now go on with the technical analysis on many different time frames, starting with the longest term, which is the quarterly. Then we'll move it to the monthly, the weekly, the daily, the quarter daily, and then the hourly. Within this chart, it was trying to go bearish in here, way back when, using the same cheating theology of knowing how currency is made and realizing that inflation would bring this up a lot higher. It was an amazing bargain to getting it towards silver, as it was in here, as it was here, and really in here. And for that matter, it still is a bargain, just nowhere near as the bargains it used to be. But with that being said, we're now seeing this candle in here, and I'm sure there's a fancy name like a doji or something. When you're self-taught, a lot of times you don't know the familiar names that other people realize, but you can understand the same analysis, and that is it is an indecisive market, or one that has worked for both the up and down side. It's already went through a corrective factor, thus giving it energy for further upside momentum. The trend line, of course, that's not a straight line, but this one will be, and it's bigger than I thought. This trend line obviously can still be reached. And if we connect these two lines, we're above this one in here. So this is giving me Very much bullish scenarios just by looking at the chart alone. Now, if you count these green candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 consecutive quarters that is up in a row. Currently, we're positive for this one, and it ends in the end of June, but it still has a way to go to continue its winning streak. And because we see that, mathematically speaking, it can still pull back and remain bullish. I think if it pulls back down to here, the status would go from very bullish to bullet to just regular bullish. And if we come back towards this 18 period average, then that would make it cautiously bullish on a mathematical level. As far as selling signals are concerned, I think we are a heck of a long way away from this to be the case. I want to get the yearly chart in here. I need to get some more data. But like I stated, when you are in a situation when you're at $50 back in 1980, $50 per ounce, and today you're at 38. That means you are down about 30 or about 25%, we'll say, from that peak. That just doesn't make sense. So where is the fair value today? Is it 80? Is it 120? I'd have to say it's at least in the 80 area. A lot of it's going to be using psychological or fundamental analysis for determining this situation. Or if you're looking to get in and out with different positions on the shorter term time frames, unloading smaller amounts. I failed to do this myself. I wanted to sell a little bit at the 50 level, and I had an opportunity to, not the first time, but the second time, and I lost out on it. Some people gained on it, some people didn't, but the sale that I wanted to do wasn't really all that big anyway. Okay, so this market obviously is bullish. We have this Fibonacci level at the previous level of resistance. I don't think it's going to come back. Just because it's a major level doesn't mean that major previous resistance is going to mean support, because 1,000 has been the case in 2 different markets that was major resistance that never found support after it broke out. Those 2 markets are the gold market and the Dow Jones Industrials. It both had major resistance back in the day at 1,000, and it is yet to go back to that level. Moving on to the monthly chart, and it's bullish, moving towards a very bullish state. And you know what, you might say, why do you have the other one as very bullish and not this one? It broke away from this level back here. It's in a major uptrend. It's well above the 18 period average. It should be very bullish, and you know what, you might be right, because it is extremely bullish to see the market in this sort of uptrend, well above that period of average. It has pierced above this trend line, the resistance line, and it's come back to it. And if on the next candle, or even, well, how many days do we got left? Today, on some days, there's 2 trading days left, the 30th and 31st. The 30th is a holiday in London and in the United States, but there still will be the market moving on. 2 days left in the month, so most likely it's going to trade. And why do I have 43.73 here? This data is totally wrong. It's not, it's 38. Well, that caught me off guard, actually. However, that's because I didn't update the data on there, or I just put in, I don't know how I made that mistake. Therefore, the market's up towards here. Therefore, now does this make sense? Yeah, it looks about right to me. I'm just going to end this at that. I screwed up on this one. The price is not 43.73, but I do know this is a chart. Let's move on to the next one. That is the weekly chart. What do we see on the weekly? Well, we're bullish and cautious. Why is this to be the case? Because we're within here. We are within this 18 period of average. It's found support. It hit this level on 3 occasions. It's now lifted higher, and it's at the top end of this. If this thing starts to break out on the next week, It doesn't even have to be the next week, but that would be a very bullish sign because you've had an amazing up move. You found support here back in January at the 18-period average of closes. You have a nice little rally, and then that massive selling brought us back down to the 18-period average of lows, consolidating there for about close to a month. And now it's at that 18 period of highs. It's still in a rising state. As long as this moving average is rising, then I'm going to keep it bullish and cautious. If it flattens out and the market trades within it, then it goes neutral. But that hasn't been the case. So for the benefit of the doubt, you really only have a few periods where once you consolidate back to this level that you can remain bullish, because if it stays within it, it will just go to that neutrality level, still above this significant Fibonacci level. This resistance level was close to this part here, as was the support. But again, if it breaks above this level, then the most likely scenario is you come back to this high, maybe you find a little resistance. What would be ideal is a move up to this level, maybe it comes back down towards anywhere, pick a Fibonacci level, guess a number, 44, whatever, and then take the target out towards the upside. Moving this on now to the daily time frame, and this one's neutral. It was bearish, but now it's neutral, and I'll tell you why. Yeah, and if you think it's still cautiously bearish, you might be right. It was bullish in here. And you're making the gain, so now you go to cautious in here. Cautiously bullish. Now you're neutral with a down bias, now you're bearish. You're bearish, 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 and cautious. Bearish and cautious, but what's happened is you've gotten above this Fibonacci level, you've gotten above the 18-period average, and maybe it should be neutral with an upward bias. And you know what? I'm probably thinking that's what it would be on the mathematical level. When so many other time frames are bullish, which we're seeing, then it's all a debatable question. There's really no correct answer between the two. Now, it's incorrect that it's superly bullish because it's not above this line, and it's incorrect that it's bearish because it's not below this line. But what's happening is it is stabilizing very, very well. It's at an area of resistance. However, it's at the second time that it's been at this area. So when we came up to this area in here, it found resistance as it was supposed to. Comes back, even though it made this lower low, and I've said this before, it pretty much didn't. It was pretty much a double bottom. Therefore, or a bottom where it hit the second time. And it's bounced since then, thus increasing the chances it gets above this level. Next one is the quarter day. And the 18-period average would be very close to the 5-day moving average because 4 candles represents a day. So you need 20 of them to be the 5-day moving average. So it works out to the 4.5-day moving average. And it's rising. It's found support at the 18-period average of highs. It's above the Fibonacci. It's bullish. Breaking above this level, well, there'll be further gains. And it doesn't need to come back to this level. It can, but it doesn't need to because it's already had this consolidation period towards the end of this last previous session. Finally, the hourly chart. The hourly chart is bullish and cautious. We were bullish in here, and then the thing changed over. This became that of a bear trap, and from failed moves often creates fast moves. There has not been a fast move yet. A failed move is guaranteed. Now, whether a fast move will come after it, that is not guaranteed. Because the failed move will either be this break below here, or this move not finding resistance in here and breaking lower. So either the move that brought us below the 37.50 mark is a failure here, or this is in here. The reason why it's cautious is because it's still trading within this area. The moving average is rising. It's still trading within a little bit of an uptrend in here. And of course, if it goes below, what level do we look? Does it look good? Yeah, right in here, or 3750. Going below 3750 will be on the short-term time frame a little bit cautious. Getting above 38 and a quarter will give it some room to test this previous resistance at about 38.75, which then would bring us the test of that large area that I've talked about before in the 39 area. Okay, 15-minute plus video. Wow. Thank you all for watching, and have yourself a great weekend and week. Bye-bye.